We understand that China is in the process of transition in the sense that it's upgrading its industrial structure, it is fostering the so-called new quality productive forces, and it's also undergoing this energy transition as indicated by the white paper released yesterday. So I think we need to think about all these in terms of the context of the growth, and the growth target was set at around 5% this year. I think it's well still within the range of the reach. I think you're right. We're witnessing China is growing in terms of industrial output has grown by 5.1% in the first 7 months. Industrial profit have gone up by 3.6%, which is very solid and healthy, especially when you look at the high-tech manufacturing and high-tech investment. They both grow by about over 10% so far this year. So I think, all these are really positive signs of the economy is undergoing, this kind of transition and upgrading. But on the other hand, you're right. There are some, I would say, really headwinds. One thing has to do with the property market that is still continue to readjust. The new home price has gone down by 4% year over year in July, and continuously we see the property sector investment, fell by over 10%. So yes, we need more policy support to stabilize the housing market. But I think the other important area that we do need to see more policy support has to do with the local government debt. So the local government has been really important in supporting local economies and also, providing very essential social services and programs that would allow households to reduce a little bit their precautionary savings and spend more. But right now we're seeing the local governments are only issuing about 45% of their quota for this year's bonds, which is much lower than last year's over 60-some% at this point. So I think that is important.